Good morning, video morning brief of the U.S. grain markets Friday, February 14th, 8:03 a.m. Eastern Time. I'm Rich Paz for Critical Point. Okay, so yesterday, Trump and tariffs apparently activated some more retaliatory tariffs. But here's the thing, it looks like that they really won't take effect for a few months from now. So he was kind of like just pounding his chest and saying, yep, we're doing this, but man, no, we're not really doing it for a while. I think this relieved some of the commodity markets a little bit, that it might leave the door open for countries to buy more product and build inventories ahead of still higher prices because of tariffs, something going wrong. I don't know if I'm right on that or not. That's something the model's tinkering with, and I kind of like the attitude, and I'm going with it. Okay, so what we have for the corn, currently March prices, looks like we're not finding level 3 bottom. Didn't work. I think you should assume it's in place. That's very, very low probability, but I think it took place. I think it's up and away. But now the model's flipping back. It moved the level 3 back to where we had it before, the previous level 3 top. And now it's moving forward the next level 3 top. This thing can top next week. Maybe as soon as Monday. I think it's going to be a little later than that. But I think we assume higher into sometime next week, okay? Now, have an upside objective of right around 498 to about 504, but I can add to that by using different components. Even this rally here and setback can be used for calculation that might offer into the 510s almost to 520. Okay, so I'm canceling this downside target. I'm still looking for a level 3 bottom, but apparently it's going to occur on the way up. So basically, I think it's useless information. I think this ship has already sailed. That's the true level 3 bottom. I'll just go ahead and put it right there anyways. Just realize I may move it up to the higher price. What's more important is the train's leaving the station. It wants to head higher into a level 3 top. I do think some of these countries might feel relieved as some of this tariff stuff's kind of delayed, shoving down, even though some of it has made an impact already. I think they're saying it gives them more time to build inventory. And I think they got an attitude, nobody can hedge and buy forward forever, okay? When you get into these if it's going to launch a big bull market because of tariffs and inflation, you can only go so far generally. And I think they're saying, okay, if they delay things, we'll keep buying, keep building inventory to protect us. But once things get out of hand, we'll just burn through our inventory, enjoy our lower prices. And when it's over, yeah, we'll have to flip over and start paying the latest, highest price. But it was going to happen anyways. So I also think at some point this tempers the demand and even could cause a backlash that once prices are moving up because of tariffs and high inflation, that they'll actually reject and back off and might actually surprise us. Prices don't go as high as they should relative to other prices and factors that are going on. Hopefully that makes some sense there. It's wonky times. What are you going to say? At any rate, this looks really good to me. I think we should anticipate higher corn prices next week. And do keep in mind on the weekly chart, we're in the price target. We're in the time frame. I think this is the last hurrah into a level 1 top, and it will pull back into March. Okay? We may learn it only pulls back 1-2 weeks, but we may learn it pulls back for a month and a half. Okay? So enjoy it. It's not going to last. All right, now let's move on to now when I say that, I'm still optimistic that there's going to be higher prices in summer, with or without tariffs, inflation, whatnot. Just keep in mind this tariffs, inflation stuff could actually do the opposite as some people are thinking. It might actually hurt prices, all right? But also keep in mind, we can have a La Nina event, we can have a weather event, knock yield down a little. If we get a Gleisberg cycle event, you're going to knock yield down by a tremendous amount. It's going to be a big bull market anyways, regardless of what's going on economic-wise. Okay, let's move over to December wheat. Chicago, big up move today, really getting serious. Amazing to me how slow and how delayed and how much they did not trust what was going on in Russia. And now they're all over it. They're even more aggressive than what Europe is doing, frankly, okay? At any rate, higher into next week, we'll look for a level 3 top. That was a level 3 bottom. This market behaved better than corn, worked with the model worked with it, it kept up with it. Great, wonderful, very proud of it. All right. Now, let's move to the weekly chart. In the weekly chart, we know we're already in some of our targets. We know there's plenty of other targets. It may go as high as 615. That's probably as high as it's going for this level one. And we know that in a few weeks, we're going to, in fact, starting next week, we're going to start looking for a level one top. Start seeing a down week. Next week and beyond, got to start thinking level one top, okay? And it should pull back into a level two bottom, all right? But it can stay up for quite a while. There's two different scenarios. One saying it stays up for a few weeks, another one saying it stays up for several weeks. But the level two bottom is pretty much anchored. So the longer it stays up, the less amount of time it has to go down into that level two bottom. That may limit downside. But again, like the corn market, we kind of have to consider this is heading towards a last hurrah. But in theory, wheat can stay up longer than the corn market. All right, let's go to the soybean market. By the way, I think if wheat traded below the low of this week, not a good sign. And also the same for corn. All right, let's go ahead and look at soybeans. In theory, the level three bottom is not in place. The model is saying this might be one of the times it doesn't fit the rules, doesn't fit the history. It's leaning towards this thing can move up now. All right. But I think what's going to occur is either level three bottom is going to occur a little bit higher, meaning I think by Monday, okay, and maybe even starting today, it backs off for a level four, maybe does not go below the low of this week. But it bottoms for a level three, then kind of blips up for a level three top. Then we're going to have to start over. That's still not all that bullish, in my opinion. You'd have to really just explode price for a couple of days or something to try to bring up a higher floor price, perhaps, and make it a little more positive. So I do not trust this thing. It's supposed to be bullish now into a level three top. It's also possible if it's going to be bullish for the rest of this month and early March, it may rally into level three top and slam dunk or something into a level three bottom only to move higher later. So we'll watch out for that. So what I'm getting at is a good possibility we've already seen the lowest price, but the model's showing we should not have found the level three bottom. But the model's just warning, but you may have found the lowest price. It's kind of like it's already bottomed or starting early. And this daily indicator is kind of telling us, you really ought to get more anxious, more aggressive here. This is a bottoming. It's turning to a buy signal. It's oversold. It really ought to rally. I think what I'll do, for my personal opinion, looking at the model, is discount the level three bottom idea and just say it's going higher into next week for a level three top, and then we'll reevaluate. I think it should do better than that. We get a gold star for having it pulled down into the target range, but it didn't really do it on timing. And if it moves higher and higher and higher and never really pulls back the way we want, we're not going to get a gold star for the level three bottom either. So we'll see. At any rate, I like some of the turnaround action. I think this market is feeling a little bit relieved. And the interesting thing is some of these financial markets feel a little bit relieved. I don't know if they're suddenly getting used to some of this terrorist stuff. Do they think there's a lull going on? There's also a possibility, even though Trump is going to ramrod the tax extension for the rich, $4.5 trillion, then he's going to turn around and actually, I think it's even more than that. He's going to nail the middle class and poor and raise 1.5 taxes to kind of balance this. And in theory, some of this is going to come from shutting down the government and won't be so much the middle class and poor, but we'll see. I don't think it's really going to work out that well. But what it's doing is, with that, though, with that package, they want to raise the debts. They want to do away with the debt ceiling is what they really want to do. And that's interesting of how hard they're pushing for that. And what it's doing is I think it's causing some relief to the marketplace that they really don't have to worry so much what's going on in government. Let them burn down Washington, D.C. We're taking care of our own business, the rest of the country. And then also delaying the tariffs. We might be hitting like a lull here in negative news, or even if you don't think it's negative, you think it's good news, it's least stressful news to the market. So it's calming down. And what it may be allowing is underneath all this stuff going on these days, that really we still have a good economy and we have a good global economy. And you have Europe and England, Eurozone and England, basically pumping the money or at least lowering interest rates to help out. They want to get their economy going, and their stock markets look great. They're doing better than the U.S., and I'm now starting to think I've been trying to be bearish the stock market into March and maybe even to May, June, July, and I'm starting to think, no, this thing just wants to keep going higher. People are starting to get comfortable with all this craziness is what they're doing. And they're just looking at the fact that apparently businesses are making money, and also on the commodity side, people are still eating, and they're eating a lot. Okay, all right. At any rate, the weekly chart for soybeans, even though I think it did the correct thing of calling a level 1 top, it's down into a level 2 bottom, and I do not believe it'll bottom next week. I think next week the model is going to either shorten that line and delay the bottom for 2 weeks, or it might take the line, just shove it to the right and still allow the same amount of time to decline and just delay it. But there is the possibility soybeans can bounce over the next few weeks and might bounce more than I realize. Okay, and if it trades above the high of this week at 1057, we have to consider that's what's going on. It's a level 3 up move. But is it now then going to challenge, say, 1080 or something like that? There could still be time, and we may have to backpedal and find yet another level 1 top in the next few weeks. It could still do it, but I don't trust it. And if it trades back below the low of this week at 1024, I think we've pretty much put the nail in the coffin for the bulls and soybeans. I think basically it should go lower, and the technical indicator is supporting that opinion and supporting the model, even though it is approaching mid-range where something could bottom it. And this may be a limited downside, and I still see soybeans higher in summer. I see all 3 markets higher in summer, okay? But at any rate, that's where we're at to wrap up the week here. Past results are not necessarily indicative of future results. The dollar's a little soft, so it's not at least interfering with wheat. I still say it's going higher later on, and interest rates higher, and there's some other complications, and we still got to deal with tariffs, and the inflation is rising. Yesterday in the producer price index, the inflation didn't rise as much as people expected, and it was actually on a month-to-month basis lower than the prior month, and that kind of offset the negativity or bearishness of the prior day CPI inflation. That's also caused them, between the two of those inflation studies, it has caused people to back off the PCE inflation due at the end of this month that is most watched by the Federal Reserve. It prefers that measurement of inflation. So it kind of put people at a little bit of ease here, where they were nervous 2 days ago about inflation, and then yesterday to say they're not so nervous about it. But in my opinion, the overall trend inflation is up. And now, is that a negative for commodities? Is it neutral? Right at the moment, I think it's neutral. But it can be a negative on the financial side. And now the question is, will these tariffs really cause inflation down the road? Meanwhile, you saw the drought monitor map in a weekly update yesterday. We do have to consider there's a chance for crop problem this year. Maybe just a slight dip in yield. It might be a gigantic drop in anything in between. That's the best I can tell you. It's really 26, 27 looks like the better time for a more significant crop problem. So we do have to watch out this summer that if it's not really adding up, we might want to prepare for a nice drop of all 3 markets into the fall months this year. Thank you. Have a great week. Thank you. Past results and on the same indicative future results.